Hey everybody, what's up? Zach is back. Well, today I've got an interesting show for you today. The day has finally come. The pullback that we were expecting, that I had been warning about on all of my write-ups at the top. And let's see, I've been talking about this potential pullback for 6 days, it seems like. I had a feeling it was coming, but it's no surprise, and to be honest with you, it's healthy, although it is painful. I am wearing a red shirt and mourning my portfolio. I probably should be wearing all black though. But then again, it's not all dead. S&P 500 is down 3%, Nasdaq 3.5%, and Dow Jones 2 1/3. Across the board, we're down, guys. I'm down on because I have the 3x, which I was talking about in a previous video. What goes up by 3x is going to come down by 3x. So I'm totally down 10% today. I'm not all that concerned. Possibly the markets could pull back through the end of this week. I would not be surprised, but if we can get out without so much more bleeding, hemorrhaging, then I think we're going to be okay. And I'm pretty used to this, so I'm not tripping over it. I've been in crypto since 2011, so I've seen a lot worse than this, to be honest with you. So this for me isn't really anything. But anyways, let's continue. I posted on my Twitter about Nokia before it started taking off. I'd seen it start trending online on different places and sites, including Reddit and Twitter, and also some finance sites. But that's taking a long time. And also AMC as well. But nevertheless, I had called those out on my Twitter, so I really hope you guys are following along and taking note of all of these things, because some people are making some really good gains at around $3. Video actually right here that I had called that out before it happened, and then Twitter is not working for some reason. I don't know why. Anyways. So yeah, go ahead and click on those links if you want to see that. And down here we have some of my followers that are following along, turning on those notifications, subscribing to my blog, which is at the bottom. Just enter your email address right here. And you're going to get these email notifications when a new analysis and daily write-up is available. But we have some winners. So congratulations, guys, and thank you for letting me know about that. Please, if you have some big gainers, go ahead and send me a screenshot or a picture of those, and I'll post that on my Twitter and give you guys a shout out. But anyways, here are the shout outs for our big gainers. Anyways, so yeah, Nokia is up 28.5%, and AMC is 275. It's just ridiculous. I really gonna have to give credit to Wall Street's bets for pushing those up, especially AMC. It was trending all over Twitter yesterday. Save AMC, which is it's an interesting time to be in this. I've seen a lot of weird times investing through my career over the past 10 years, most notably in crypto. But I got to be honest with you, this is pretty strange, and I love being in stocks because it's more chill than crypto, and the fundamental analysis is a lot easier. There's just a lot more news to read and things that might affect the markets than crypto. So I've seen a lot of weird things in crypto, but this, my friends, is some of the weirder times. Anyway, so my poor portfolio is down. Don't even really want to look at that, but it is what it is. I show you guys the goods and the bads, the highs and the lows. I'm all out in the open for this. So I hope I build up you guys' trust. That's really the most important thing when I'm building this community. And we're a little bit small right now, but we're going to be big one day, don't worry. Anyway, so I went ahead and put Nokia on the official watch list. It was a little bit late because it's up a decent amount, but I think it's got room to run. If you follow along the trends, usually they're trending for a day or two before they really start gaining big. Most notably GameStop and AMC was out there for about 24, 36 hours before it really took off. And it was yesterday in the after hour trading that it really was taking off. But anyways, so Nokia, I got a target price at around $10. Try to get in at less than 6. Let's go ahead and take a look at what this is right now. Yeah, that's pretty. It's a pretty big candlestick right there. Big wick though. But yeah, it's trading at 592 right now. It's down 10%. I think that's not bad. I mean, there's no reason to draw any technical analysis lines on here because it's just moonshotted. Moonshot. But anyways, try to get it less than 6. And this is risky. Be careful. I rated it as a 5, which is the highest on my risk scale of 1 to 5. Be careful with this one. As you can see, it just crashed from around 10. I think it can get back up there. More momentum. It really depends on the online trends and how people are going to take it, because there's quite a lot of these moonshots going on right now. But anyways, 1 to 2 weeks, I think that's, I think it could probably hit that tomorrow. If it hits 10, I would just go ahead and take profit. Personally, I would recommend some short-term calls. A little bit out of the money. Don't go too crazy though. Maybe 1 week to expiration, something like that. Think about it yourself, guys. I don't really like giving you the exact trades that you should do because, it's really going to be up to you and your risk tolerance. Don't just only listen to me. I'll post my trades that I'm doing, but as far as, I'm not a registered financial advisor or anything like that. I'm just an investor that's been doing this for a while, and you can listen to my experience. Make your own decisions, please. But anyways, time frame 1 to 2 weeks. Like I said, 1 or 2 days is possible. So once it hits $10, my advice is start taking profits. But yeah, I would do a short term out of the money, because if you lose out on this, you're only going to lose a couple $100. Let's go ahead and look at the options for Nokia. 2-day to expiration. It's possible if you want to gamble. It's a little bit expensive because this is just so memey right now and so hot. So the premiums are going to be expensive, but we're looking at around gambling with around $200 right here. But hey, it's not that much. I mean, you could do just the implied volatility is 700%. That's funny, but that's just going to tell you how risky this one is. You know what I mean? But you could do $7, $8. I mean, 2 days is you're gonna make a lot of money if it hits $10 though. I'd go ahead and start selling that and get 1 or 2. But look at 9 days. It's also more expensive because it's a little bit further out. You have more time. But 9 days you could go up a little bit, but they are just expensive right now. That's why I always like to say sell the covered calls. I know I always talk about this, and it's not as fun and exciting and sexy and whatever as naked calls are, but you buy the rumor and sell it to the fool. This is the rumor phase that we are in, and my personal advice is sell the covered calls. If you want to hold 100 shares of Nokia, you're taking a lot less risk. It's only $655. Keep in mind, you just buy one contract for a $10 for a 9-day to expiration. It's already $530. Of course, tomorrow market might, when the market opens, it might change. That's almost the same, to be honest with you. You know what I mean? So if you can get just get 100 shares for $655, okay, and then you come in here 9 days till expiration, you go ahead and sell it. I don't know. You could even sell it at $10. I mean, see, this is the magical thing is at current prices that I'm looking at right now on Webull, you would get back. You could set a limit order. 460, 545, 530, like whatever you want to set. You could even do maybe just 5. So totally you would get back $500. I mean, that's kind of win-win. Because of the high implied volatility, these premiums are going to be very nice. So, oh, sorry, this is put something stupid. I was wondering why that's so high, but hey, doesn't matter. My mistake. Make sure to change that over to calls. But nevertheless, on this is the put, change this to call. My bad, guys. Sell it. You would get back about $200 as a limit. Of course, you could do it 8. So you're gonna, and that'll be $233 back. So I mean, pull out the handy calculator. Just go ahead and punch this in. 650. Oh, sorry. You would get back in premiums. Just say $233 at currently when I'm making this video, divided by 655. I mean, you're getting back 35%. So the one way you can look at it is if Nokia does go up to your $8 strike that we were just analyzing right now, you're going to make money because these 100 shares are going to go from $655 investment to an $800 investment, and you're going to sell those at $8 if it hits your strike. So you're going to make money right there. Not to mention you're going to make 35%, $233 just from selling this call. So I mean that's 35%. So you have some leeway. Like even if let's do it on the flip side. So 35% times the $6.55. So your cost basis is going to go down by $2.33. Okay, because you just made 35 cents for free. So really, you're kind of getting these shares cheaper. You can think of it as you're getting them for $4.22. So you go ahead and be bullish all you want on Nokia. I'm going to play it safe. I might think about selling the cover calls, but I really don't like messing with these meme stocks, especially when they're on a run. Now, if I had my account, if Webull had approved my margin account a day earlier, I would have bought the 100 shares of Nokia or a cheap call option, or I would have bought the AMC, but hey, I missed it because of my, I was applying for the margin account. But hey, I got the margin account, I'm back at it. So anyways, guys, just be a little bit careful on that. Alternatively, you can sell a put. So let's go back into puts now. So we can sell a put. Let's see. Let's say if it drops down to $5. So we go ahead and sell this. We're going to get a premium of $89 right now. And then if it hits $5, we're going to buy 100 shares at $5. So we'll get a little bit closer, cheaper. But it might not hit $5, so think about it, guys. Just think about that by yourself. All right, another one I saw. This is going to be a really early SPAC. It's Constellation Acquisition Corp. They're looking at acquiring some innovative company in one of the rapidly changing segments of the global economy. That is what I saw an interview with their chairman yesterday. Actually, today was right when the markets opened. Sorry, but yeah, I saw an interview, and it looks interesting. The SPACs are just beating the S&P by a lot. They have those SPAC ETFs that you could check out. They're risky though, so be careful. But this could be a really good one because their CEO has a lot of experience, as you can see. And, you know, just put a little bit on some SPACs every now and again, I think. But this one just launched. So as you can see, this is the 4-hour chart, so we're literally on. It literally just launched yesterday. It's pretty flat. Nothing crazy going on. So get in it early. That's all I got to say about this one. Try to get it around $10. If you look at some of the other popular ones, the other popular SPACs, they're starting around $10. It's very normal, and getting up to 18, 20, I think. This one is, by the way, good to by iPod and iPof, IPOD, IPOF. But anyways, you can see that they do go up when it's closer to getting some news coming out about who they might merger with. You know, they're going to just go up, and then once they do merger, they are known to double or triple. So just be a little bit careful, because if you get in this too late and some of the rumors fall through, then they can crash back to 10. But I think that this is, and you know, I usually would rate this a risk as a 5, but I put it as a 4 because this one is really early. So just trying to keep your portfolios relevant. But anyways, price target 20. I can see it doubling. Entry get around 10. It is 10 right now. I don't see it going any lower than that. But 10.30, whatever, $10.30. 1 to 2 months. Just give it some time to appreciate. And that's really all the new ones that I'm going to be adding to the watch list today. Just Nokia, and I'm not going to do a technical analysis on that because there's no point. Nokia just moonshotted. Like, what are we going to draw up on for the lines for that? And then the CSTA is just brand new. It just launched yesterday, or sorry, today. Getting the time mixed up all the time. Anyways, so here are a recap of my positions. You guys can take a look at that if you want. I sold some puts yesterday. I'm going to start running the wheel on SPE, LI, and THCX. I'm going to get a couple hundred shares. I don't know. But I don't want to go all in. You know, someone sent me a message yesterday, earlier today, saying, why am I only doing one position? Why? It's because I want to diversify. You think I'm doing too small, but actually I will be doing a lot of small ones and trying to catch a wave like on AMC or BlackBerry or something like that. I don't want to go too big, you know, because this is the selling and put you would get 100 shares if you get assigned. But of course, for my long-term holding, like any ARK invest, you know, I'll get a little bit more. Those are a little bit expensive, so you know, put a couple of grand, 10,000 something in it. I just try to keep diversified. Um, you know, and that's usually like the 3% rule, like keep only 3% in one stock or asset at the same time. 3 to 5% I would say is interesting, but I see a lot of millennials now and even some older investors, like for example Nancy Pelosi. But you know they go a lot in on one position, and it works out. You know, it works out really well. Like Tesla, for example, if you went all in on that, it's going to work out. But you know, I personally, my style is keeping diversified because you never know what's going to happen. And yeah, I got to feed myself, and I got a family to feed, so I don't want to do that. But that's just my opinion. All right, and these are the add money to today. We got a big discount, guys. Got a big discount on a lot of these. So I've been eyeing the ARCs. I was talking about that yesterday about I want to put some money in these when they go down. Well, they're down now, so I'm going to start doing that. I'm going to watch the market, see how it reacts for the futures later tonight and tomorrow morning. And once the futures show up or down trend or whatever, then you know we will see how it's going to go, because I'm not going to be surprised if it continues going down a little bit more. I mean, if you just look, just the after hours, it's, you know, we got some that are going up in the after hours. IPOF is up there, but you know, mostly is not. AMC down 26%, but so just be a little bit aware of that. It could keep bleeding off, but I did think it was going to bleed off about 3 to 5%, and it seems like it is already down 3 to 5%. So let's just see. But nothing to be too worried about, though. Overall, we're still bullish. THCX, try to get some of these. Sell covered calls. It's not expensive. Solo, let's get 100. Sell some covered calls with me next week. Let's start stacking these shares up. EV is good. 420 is good. You know, SBE, this merger could be really interesting. It's still bouncing off my trend. Let me go ahead and show that to you really quick. Yep, it's still bouncing. We're still in a buy zone. I don't know what's up with Webull, but it always, you know, takes my buy zone away. But anyways, that's my buy zone. Somewhere in here, bouncing off this resistance. It's in a nice upward trajectory. So let's go ahead and do that. Recommend, personally, for myself, I would do a short-term hold and just wait for it to bounce, or some sort of call to save capital on this. But you know, bounce around $50, I think. So wait for it to bounce up. Next is Lee. I would just go ahead and get a swing on this. Swing trade to get some shares. If you have enough money, go ahead and get 100 so we can sell covered calls. I love doing that. Get those premiums. But you know, also could do a midterm call option on this. I still think that this is a great buy, and it's actually in my buy zone right now. Target is around 44. Go back on the watch list. You can see that. Go back in the other blogs. You can see these charts that I've drawn out for you over here on Webull. But anyways, another one would be interesting is QQQ, or the 3X version TQQQ. I like both of these. Think about the TQQQ, guys, because it's down right now. Look, when it's down, it goes up. When it's down, it goes up. I mean, and this was the bigger one. This was in October. So just keep that in mind. That was the run-up to the election. Keep that in mind. And the tech was going really hard against the former president. So the QQQ is tech focused. So you know, there was just a lot of negative news coming out at that time, but it doesn't matter. overall, this is still a bullish position to be in. And, you know, maybe when it hits this super trend, let's see what happens, guys. Let's just see what happens. But overall, it's still in an upward trajectory. I don't think since the October down. Yep, it's very nice. So I would expect this to bounce. Don't put so much weight on the technical analysis. More important is fundamental. The TA I only do for entries. So my entry would be here. I start thinking about it, but if it breaks my trend, which it's going to do, these are just lines we're drawing, guys. You know, if something happens in the news, like to Amazon or Facebook or something like that, then QQQ will fall. And no line can predict what might happen to Facebook and Amazon. So keep that in mind. But, you know, it still gives you somewhat of an idea. Anyways, so think about it. Also, the TQQQ, that's going to be the 3x version. It's down 10%. It's down quite a lot from 105, 104, 105. So this is the similar thing, guys. It's also, this trend is literally exactly the same. So I don't see why any reason not to do this, but you know, 3x, that's just some extra leverage for a dip. Be careful though, watch what's going to happen. It's at 92.90 right now after markets. Let's go down to the 4 hour. Let's see. You see, it's hitting this trend line right now, actually. So just keep that in mind. I think it could be a potential buy. Just wait and see what happens tomorrow. Don't get in a 3x when it's falling if you can avoid it, like me. But it is what it is. Also, the same thing as the QQQ. It'd go into SOXX and SOXL. Those are literally one of my favorite. SOXL is down 15% today, and that was the bulk of my portfolio. So, you know, I would highly recommend that because it's done really well for me. Look at my other videos for reference on those, for the video I did about my portfolio. And Tesla's approaching an interesting price, around $800. I'm a buyer, and it's $820 right now. So I'm a buyer. Tesla is still in our little channel that we've drawn up. So what's going on with that wick? Anyways, so I'm a buyer around here, around $800 actually. I'm going to go ahead and move this. I'm a buyer around there now. Have to adjust it, but I want to buy 45 more shares because then I'll have 100. I can start selling covered calls, which if you guys, you know, I know a lot of you guys have small account balances, but if you look at these premiums in 2 days to expiration, if we sold this call, if we had 100 shares and sold the call for 900, I don't think it would hit 900 in 2 days, but hey, it's up to you. You could even do a little bit higher. But the premium on this is $2,370. You could set a limit at 24, it's suggesting, but I mean, that's quite a lot of money to be made. And Tesla, I'm bullish on anyways. So that's really, really, really interesting for me, and I'm sure you guys, I'm sure some of you guys are thinking about that too. I personally have advised a few people that are considering getting 100 shares of Tesla, and they already have some because it split 5-for-1 not too long ago. And then the next one I'm looking at is Baba. Baba's having a rough patch because of Jack Ma disappeared in China, but he's reappeared, and with the downtrend in the market now, we are still in an interesting buying point. It is crossed the 180-day EMA, so I think so it's above that, and it's in a bullish trend now. So yeah, I think that could be good to do, especially with the news coming out about Ant Financial. You guys should give a quick Google to the Ant Financial seems to be getting approved now in China. But anyways, and then Plug, of course, if you're interested in the electric vehicles or the charging or anything like that, go ahead and check this out. I'm not so intrigued right now, but I'd be a buyer a little bit later. It's down quite a lot today, so I just thought I'd let you guys know. It's still hitting this super trend, so let's see if it bounces tomorrow. It's it could be doable for some long-term calls. Save your capital on this. Do some longer-term, mid to long-term. Save your capital. The Tesla, I would just do long-term leaps like Nancy Pelosi did, or just get some shares if you can afford it. But yeah, save the capital on these. Get leaps or long-term holds, I would say, for your portfolio, because eventually they will be up. Anyways, guys, I really appreciate this video, making these videos for you. I see some guys on my Twitter hitting me up, answer some questions, and I'm really happy to do that. Steve Scott said he's trying to figure out how to screen and make decisions to get into an option or just trade normally. This is a really good question. And you see I've made some of my own personal things. I mean, really, if you are, let's just say you find a stock. Let's just go ahead and say Baba. You find a stock you're bullish on. You think it's going to go up because you've read the news, you've done your fundamental analysis, okay? Or you listen to some reporters or analysts that you trust, and you formed your own decision, done your own research, and you're bullish on this. You think it's going to go up. Well, how you make the decision whether to buy options, call options, you could do credit spreads, debit spreads, the vertical spreads. There's a lot of different things you can do if you have a level 2 or level 3 options account. But just the basic for beginners is calls, long calls, or you could sell covered calls, or just buy shares and hold them, or you can buy and sell the shares. Okay, so those are the basic things. If you can afford a lot of shares of Alibaba, because it's a little bit expensive, so do that. It's the safest thing to do. If you want to buy and hold long term, do that. If you want to save capital, I'll show you guys a trick. I'll explain leaps. So leaps is just long term options. So that's more than 1 year. So let's go out here more than 1 year. Just say next January. So the leaps on Alibaba, we could do in the money leaps at $200, and this gives us 1 year till expiration. One contract of this is going to cost you $8,100, but you'll be able. But it has a high delta. Look, the delta right here is 78. So the higher the delta, the more it's going to act like if you just had 100 of these shares. So this is a pretty high delta. So it's in the implied volatility will be pretty low. It won't move around and give you a lot of free roller coaster rides, but so it costs $8,100, but you're going to have almost exposure to maybe 78 shares of Alibaba. So now if you think about it, how much is 78 shares going to cost you at $260? That's going to cost you $20,000 to get exposure to around 78 shares, let's just say. But you're doing a long-term in the money leaps, long-term call option. Make sure I'm on call. Yeah. Okay. And so you only need to pay $8,100 to get exposure to about 78 shares. All right. So that's going to just overall save you capital. You're going to save $12,000, or you could take the $12,000 and put it in something else. I mean, we can look at the Tesla, but those are even more expensive. Let's see what else could be good. Probably ICLN, the Clean Energy ETF, or possibly the THCX. Also, I'd recommend ARC. Those could be really good long term. So let's say if you don't want to fork up all the money for these shares, let's go not 2 days, let's go way out. Current price is $138. So let's see, a $100 in the money. It's going to cost you totally $5,300. The delta is 79, so it's about exposure to 79 shares. Well, so calculate it. 79 shares times $138 current price. That's $10,900. But actually, you get exposure on if you get this leap option. You get exposure at only the same exposure at only $5,300. So the leaps are just going to save you money and free up capital to do other things. Obviously, be careful with this because it's still an options. If it's not over $100 at the end of the 359-day period, you're going to lose all your money. But you can sell it before then. It's not a big deal. You can sell it whenever you want before that expiration date. But overall, it's just going to save you capital, free up your capital to invest in other things. Therefore, creating more diversification. And the other thing that you could do is if you think, well, let's just say you think the QQQ is going to bounce, which probably it will. So you want to go QQQ, you want QQQ in your portfolio, but you want to do a, let's see, a midterm, you think a shorter term option. So do, I don't know, let's see, about 3 months, about 79 days till expiration. You want to make some money on this one. So do out of the money. These are more risky. It's not, it hasn't reached these prices yet. So let's say in about 79 days, you think QQQ can reach 330, which is very possible because if we look at the chart, it was 330 literally yesterday. So this is not a bad play, guys. By the way, this is going to cost you, this option contract is going to cost you $1,181. You can set a limit order and change it. $1,180, whatever you feel like. Okay, so that's gonna change it. So that takes even less money, but this is more risky because you only have 79 days to reach $330 of your strike price. If you don't get 330 and you wait until the expiration date, it's going to expire worthless. But if it passes 330, which I think it's likely, could get 340, 350. You're going to be in the money. You can make a lot of money. So I mean, think about it. It's 320 right now. So let's go $10 back. $10 is selling for $22.40. Okay, so $2,240 to buy that. Now you're buying right now we're hypothetically buying a 330, which is $10 out of the money. Okay, so let's just think about that. So it's if it reaches $10 in the money, so 340. So this should theoretically, hypothetically, double, because it's 11.45, and right now the $10 in the money is 22.40. So I mean, it can double. So your $1,100, or you could get two contracts, $2,300. It could double. I would say the QQQ options are very safe. It takes a little bit of money. You need at least $1,100 if you do 79 day. But if you do a shorter, even shorter, this one would be even more careful. You could do maybe a even shorter, 325. So if QQQ could get to $325 in only 9 days, this is only going to cost you $394. And so if it's $5 in the money, price is $860 versus $375. So I mean, that's almost a 3x you could make if you bought the 325 and it's in the money by about $5 or so if it reaches 330. But of course you have the break-even price because you paid. The break-even price is 328. So keep that in mind because you're paying for those options at 325 plus your debit, what's going to cost you to buy the contract. So you just add the 394 to your 325, and that's how you get the break even. But anyways, guys, you get the basic point. Let's see, did I cover all of Steve Scott's question? Yes. So basically, it depends on your capital, it depends on your risk tolerance, and it depends on if you want to do mid, long, or short term. That's basically how you would make the decisions. If you think one is going to jump all of a sudden, like QQQ or Tesla, if it's going to jump, buy some short-term options, but they're risky. Don't go big. If you can go a lot bigger on leaps or just buy and hold. If you want to save money to diversify more, I would recommend leaps. In the money leaps, get a high delta. Remember, guys, the delta is, let's see, way out in 1 year. The delta, look, the delta is like 91. You can get some really high deltas. That's 91 is basically, you're just holding 90 shares at 90, at a 90 delta. That's basically what it means. But it's costing you like half or three times less money than just buying the shares. But of course, it's a little bit more risky. But the leaps, you have over a year to act on it and sell it if you want. Anyways, guys, I think that wraps it up. Leave a comment. Any more questions you have, I'll make a video. I'll do another poll tomorrow on my Twitter to see what you guys want. Let's see how the market reacts and for the futures later today and tomorrow morning. See if we're going to get into any more positions or option plays. Play it a little bit safe for now, guys. Don't take any risks while any unnecessary risks while the market's pulling back. Go ahead and get into some leaps. Go ahead and get into some long-term holds. Set up some covered calls. Pick up 100 shares of some cheap ones you like to set up selling some covered calls with me next week. That would be awesome if we can all do this together, and make money together is really my goal. I've done okay for myself in the past 10 years investing, and I really want to share my experience and different plays with you guys. I really like helping people, and it really makes me happy when I see you guys post your gains online that are coming from my stock picks. So just really thank you guys for posting those, and please keep them coming. I love to see that. I will repost it or like it or whatever, and shout you out on the daily video. So go ahead and follow me on Twitter. I will post a link in the description. Go ahead and give this video a like. It really helps the algorithm for YouTube. We want to share this content. I want to create a big community, and I'm doing all of this for free. And the only thing I ask you guys is to give me a like, shout me out on Twitter, share the video with your friends, and if you don't have a Webull already, go ahead and use my link. That's the only thing I get out of this, guys. But anyways, one last thing I wanted to do is remind you guys that I do one-on-one private coaching. So if you guys want to hook me up with some sessions on Zoom, just hit me up in the DMs or send me an email through my website. It's all good. If you want a personalized strategy or risk assessment, or for me to go over your personal portfolio, please go ahead and hit me up. Don't be shy about that. I usually answer all my messages if I have time. But anyways, guys, today's a hard one, but spirits up. Have your diamond hands, as they say. Keep holding those long terms, and I'll see you on the other side. Peace.